Good afternoon, and today is March 21st, 2024, and it's the Thursday, and welcome to the end of day review for today. And we almost finished this week. Tomorrow we have a Fed Chairman Jerome Powell. He gonna speak. Let's see how Friday. So he so we have a speech, but he didn't say where it's gonna happen. Around 9 a.m. So basically we have, the Fed come out the huge impact news yesterday, and today is the day after. Of course, second day player. We learned a lot today, right? And by the way, we are in week 12. One more week, we will close out this first quarter of 2024. And we are in this week. So the option expiration day, nothing going on there. But next week gonna be a end of month and end of quarter right there for option and future. Quarter option, quarter month. That's right, for option. ETF. And the right one is the standard. So after. Alright, and we already checked mark for Mark 12. We done for the week before, and now we look for the CPI next month, April 10th. We already done. We check this. We wait for the next one, which is April. And yesterday we did review. We did review for the day that end of day. We did review for FOMC meeting right there. So here's the model. We are take a screenshot, but we haven't generalized yet. So basically that look for the manipulation before the new release. The manipulation gonna be tap into the high time frame PDA. In this case, is a bullish breaker and favorable gaps. Look at the 1 hour time frame right there. You see the favorable gap right there. So it's just a manipulation. Retest that so-called support area or liquidity pool right there, and then the new release, boom, make the first move, which is a huge move right there upside. And then look for a pullback right there. So this is another manipulation, and then it's distribution, the second leg up, and it keep going. So there's no reversal into the Q3 right here. So Q2 accumulate sell side, and Q2 continue accumulate sell side. So the manipulation before 14 is for sell side, liquidity rated sell side, and also it retests the high time frame PDA array. That means, and the first move is up close candle right there, and then the second move is the pullback, and the pullback form a very high probability setup. Basically, is a balance price range and retest right there, which is the high right here. You see the gap right there when it break out this high time frame level, and then it's break again, it rebalance that, and then it retest that. That is the very highly high probability setup right there. We just want to review that so we get that in our subconscious mind. So next time we don't have to thinking, we just see the setup and we execute them without hesitation. It just take practice. So the high rate right here is balance price range right there. So basically the failure gap down, and then you have a failure gap up and retest. So vice versa, right? This is long, right? If you have the short, then it's gonna be this balance price range, the number one right there. So basically intermediate balance, but you can use this also at a inversion. So this one we can call is a inversion right here. For more accuracy, you can see that is inversion. Basically number one and number two, which is high probability setup right there. Let's see on a high time frame. If we see high time frame, yeah, so I think this is more with the go with the inversion, which is the number two right here, inversion right there, because it's not rebalance, it's not rebalance right away. They here at least gives you two candles, so you can consider this right away, but in this case not. So likely it's gonna be the inversion in this case. So when we see that setup, we can go long. If we make this move, then definitely we're gonna go long right here. So the move number three is gonna be distribution to the upside. So we go in at the retest right here, and then we enjoy the run right there. So that's the day of the FOMC FOMC meeting. And here's the day after, and look at this move for today. So it's continue move up, but if we look at the gap, it's a huge gap. Okay, the huge gap up right here for today is $2 is a void gap, and if above the day before, the prior day, PM section, we did look through the ICT, one trade setup for life, and you know what, we anticipate it's a gap up. So it's not feeling a gap at all. Let's say it's a gap down. In this case, it's a gap up. The inverse of this is gonna be a gap up. And take out the previous. Oh. And look at the swing. And anticipate it's went into the opposite direction. If the price, yeah, that's right. We make a little bit mistake right here. We didn't see this model. The only we see this model this morning is right here. Yeah, that's the mistake we make. We only see this model. Basically, we anticipate a Utah swing, which is the PM section yesterday already high. So we anticipate that, and that's what we try to short them, and it not work out. Basically, well, we see the Utah swing, right? We see the Utah swing before 9:30, but it's not exactly right here. Right here, you want a straight up not 2 leg up right there, and here is 2 leg up. You want that to be around just before 9:30. So basically you want something like this right here, or here, consolidate, and it run. Here it pull back, right? Pull back to take the buy side, but we want something like continue, not pull back, right here. Basically it not pull back, it keep moving, and then we see the heel run right there before 9:30. So basically there's no pullback right there. So want something like that, but it's not happened this case. If it's happened like that, then we can apply this setup. Basically, look, this morning we applied this setup, but it's not happened in this case. We kind of loosely apply, but if you follow, it's just one Judah swing. But this one, it does look like Judah swing, so we apply the model not properly, so we try to short them. We get our break even anyway, so we try to short when we see the try short right here, and we didn't take our profit, so we just get break even right there. So this model is not quite the first model, not fit to the ICT model. We think it's the model what? Model 2. Model 2.1 right here. So you have two model 2.1, model 1, model 2. You have two of them. Two 1 and 2.2. Then model 3 you have also 2, 3.1. Can we mark this? So model 1, we can mark this at model 1. Can we? Cursor. What is this one? Read out loud.
Bullish example. This is considered for liquidity only if price is still within or close.
Cool. Really cool. Okay. Can we do right here? Yeah, we can do we want to fix on one page, so we can say this is a model 1. How about that? Model 1. We just look for the Judah swing, check the south side liquidity of the Friday PM or the low of the prior day, not just right here, the PM. And then this is the Judah swing after 9:30, and this is the Judah swing before 9:30. So you can do this in the bullish and also in the bearish condition right there. You just flip this chart, you can have a bullish. You can have bullish. This is a bearish short term, and we call this is model 2.1. And then we can call this model, give it a name so it's easy to just reference 2.1, 2.2. And then we have the model. Oh, so look at U swing at 130. Model 31. And then we have a model basically each of this scenario we can flip the chart so we can get the opposite direction. 3 2. Okay, so this morning we go in and we saw this run up, so we apply the model 2-1, which I showed them, but it's not working out. And now we look carefully again, we see that we make mistake because right here the model tells us, let's save it. So we try to upload model 2-1, but it just one leg up, straight up, very low resistance liquidity run right there. But in this case, it's not the case. It not run up at all. It do have a 2 leg right there. So it pull back and then up. So that should not be applied model. So that's the mistake we make this morning. We try to short. Alright, let's see what model play out for today. We should apply this model. We apply model 2-1, it's not correct. Should model 2-2. The reason why model 2-2 work because you just flip them. So basically is you have a U swing, continue to go up, pull back a little bit, continue up until let's see, look for your swing, take liquidity to one side, anticipate expansion into the opposite direction back to the opening range gap right there. Always aware of the new one to avoid IM. So basically I should say tell it to avoid the IM. If the price, yes, that's the reason why we short, because we anticipate we up a lot of model, we anticipate it's gonna go down and close the gap. That's the reason why we short like 20 times in the IM, and we're glad that we don't do any damage at all because we just short one contract. So we learn, but it's a huge lesson for us. And if we look carefully right here, I just give it a lot of insight right here, and we learn. So avoid to short an IM. Yeah, we did take a note in our journal. Yep. So the day, so if Wednesday rally really hot, it did. Do not short on Thursday right away. And there is an void opening range gap in this case. Then do not short in AM. Wait for 10:30ish, 12:30. Yeah. Wait for PM section. In this case, look, 10:30ish. Yeah, that should be our note right there, which is exactly what happened. So by the way, we so anticipate to short them, but if we look at this model carefully, it gives us a white do not short. And we short around, I think we short right here. By the way, we use option to short them, so it's not show up here. Let's show trade. We did go long right here. We did go long right here. Long at this, and do we get, yeah, we get break even. We go long right here, and when it pull back, we move our stop loss and get break even. Hold on, let's see. What do we have here? Alright, let's see. Yeah, this the long. We do a lot of short right there. Let's turn off the trade for now. Okay, so how do we approach the day after? Just apply the model, the ICT teacher right there. Next time, apply this model. We see a huge gap up. The day yesterday, it moving. It's really very hard, and today it have a, where is the other chart? Right here. See that the huge rally yesterday and a huge gap for today, so we should avoid to short them in the AM. Wait for the PM. That's the whole idea right there. Let's check this screenshot so we can see. Right here exactly 12:30. Or 1:30 for that matter. We can say that FOMC second day setup, or the day after, right? You can call that. I think the S&P Capital, they cost the second day after. So if FOMC day rally hard and there is a void opening grand gap, in this case the gap is $2.97. That's a lot. 91 right there. On the second day, then avoid going too short in AM, even though the gap still left unfilled. That's our mistake. As soon as we saw the gap, we go in and short them because it's just our reaction, just in human nature. We saw the gap, we said, wow, we need to go down and close the gap. Because markets need to rebalance right away, right? But the issue is that it not rebalance right away. Yeah, we can short them, but we will run out of money. If you keep shorting, right? Eventually it will refill. But the trick is that when it start refill the gap, we all run out of run out of bullets, run out of our ammo, ammunition, ammo or bullets right there. So we have to save our ammo for the PM. Yeah. Look to short in PM section. It's around 12:30 in this case. 30-ish or 1:30-ish. The target could be the gap. Be the unfilled gap up. Yeah, that's the whole idea right there. Yeah, that's the whole idea for the FOMC second day setup. Yeah, that's the FOMC second day setup. We'll give the date today is March 21st, 2024, and it's Thursday. Yeah, so that's the Hill lesson first. You see it accumulate. Basically, we look at the price just accumulate right there. After the Hill move, it's gonna accumulate. Let's see how tomorrow play out. By the way, tomorrow we may not be available for trading. We have other stuff to do, so just okay, so let's see. Now go back to here. We see that let's clear all the charts right here. It got confusing because the upside we don't have any because it's all-time high, so don't have any reference point at all. But let's look carefully right here. So we see that it make all-time high rear at 4, the London. Right? This is our point of interest of breakout level right there. It's close above this is another bullish breaker, and then it's break it with this Dow close candle. It's break that level. As soon as it make this swing down, it make a double bottom right here, and it create a so we have break this level with this fabric gap, and then right here it rebalance us. Wow, we didn't see that coming. See this level right here is break it with a fabric gap right here, and then you have fabric gap right there. Just look at this. Now we look back, we can see things. Just break down, it become a bearish breaker right here. It break down that level again, it create another breaker, bearish breaker, and then boom, another breaker right here is a failure gap. You see failure gap right there, failure gap right here, yeah, and then this is the last bearish breaker, and it turned into a order block. You could say that. Not yet. It create one more breaker, break this level. Wow. One more. So you see that there's another bearish breaker, and this one turned into an order block. So you have a failure gap right there. Failure gap right there is rebalance. Rebalance this price, and then it create a last bearish breaker, and then it turned into an order block, and it also create a failure gap. Rebalance this, and then up here failure gap, rebalance that, and then order block. Then it's break down this level. Look at that, and then it pull back. It's create a fall breakdown right there, and whoever short here pay a peak price. It keep going up right here. So how do we anticipate right here? Oh, okay. So the price after move down here, it needs to rebalance. So basically at 9:30, it already rebalanced this level. So then the rest of this, it just try to build up, accumulate right here. It's accumulate sell side liquidity. So we have quarter one, quarter two, and quarter three right here is all rebalance this error, and now it needs to set up another, accumulate one more time sell side liquidity before sell off, and the sell off just around 12:30. What a coincidence, right? The algorithm very precisely, and we can see it right here. We see that. You see it keeps seeking, it build up or accumulate sell side liquidity. In other words, it seek buy side liquidity. So it take the quarter one right here, quarter two take the buy side, rate the buy side, quarter three rate the buy side, and look at this quarter four. It's very, very precise right here. So look at quarter four, it did not rate the buy side of quarter three, and it carved inside bar right here. You can see it carved inside bar between this Himo radar, and look, when it go into the Q1 in the PM, it do the manipulation right here to rate the buy side, the last rate, and then boom, it go down. Go down, take all, you see that? It take all the sell side liquidity that it accumulate the whole 1, 2, 3, 4, 5 quarter right there. It's like 7 hours. So 7 hours set to accumulate, and then boom, accumulate, manipulates, and then distribution right there. Accumulate, manipulate, accumulate, and this manipulate, and then distribution. That's the whole idea right there. Wow, that's beautiful. And as soon as the first quarter PM, it rate the buy side, and boom, it show up right away. We're a little bit confused right here because, oh man, when we trade this in the morning, it's very tough because you see that it's very hard. Look at this. There is no so-called low resistance equivalent at all. The move is not easy. Maybe tomorrow, but today is very hard. Yeah, if you trade today and you make profits, congratulations you. Today is very high resistance liquidity, and it makes sense because yesterday is a huge move. Today to accumulation day. It's accumulated data in both sides, buy side and sell side. So let's see on the look at the setup right here. We see a 12, boom, moved out and see the gap right there. It retests that gap. So we should put a buy stop in here. So we have a trade right there. Or we can put a buy stop at this level. As when it above this fellow gap, we put a buy stop. If we we have to be precise right here, the gap right there. So this is become, we watch in real time when it break out level and this will go up, boom, it go down right away. So it gives you the signal that they're gonna come down. And before it coming down, it did retest that level. You see this level right there. So we put a sell stop right here. And this is the order block because it break out of levels. Order block, favorite gap, retest. It's the very, we can do a limit order here, or we can do a sell stop right here. And let's see how much we risk for this one. So basically we go in right here and we put our stop loss right here. Oh, can you believe that? It's just 18 cents. Wow. Then we know that it's gonna come down, and look at this target is the buy side liquidity, sell side liquidity right there, which is M right there. Oh no, this breakout level, and it hit at 1430. See that 1430. Let's mark this 1430. 1430 right there. That's where we hit our targets. Wow, so the huge risk reward ratio for us right there. We can go in right here. So, wow. Man. Yeah, if we miss the entry at 12:30, we're gonna go entry at 12:40. 10, just 10 minutes later. So our interest, our break level is the 523.80 right there. So we call this is it have everything right there. We call it a fall breakout, right? And this case is equal to the order block. the set auto block, fair value gap, retest, and it's a short setup. The time is really alignment right there. So candle, we watch in real time. We see this candle 12:30 flip from green to red. That keep a signal right there. And the breakout level, we are anticipate. Watch out, two level right here. The first one is 523.98. That's where we put our stop loss. And then the second is 23.80 right there. That's the breakout level, or point of entry. So if we mix, we put a sell stop at 423.80 and entry time is 12:40. Targets we all know. The sell liquidity at level 522.21 right there, and the risk to reward ratio is huge. So basically we reached 18 and we got 18 cents and we got $1.59. So what the risk reward for that? 10. Is that 10? Almost 10. Let's go with 8. 8 times 8, 64 and 14. Yeah. So this 1 to 8 risk reward ratio. Wow, that's the giant right there. It's just magnificent right here, my friend. You see the target from this level. Man, it's like perfect. We just add something right here. Exit time 14:30. Can you believe that? It's just 2 hours right there. Right, we're going around 12:40 right here. We could go early. We can go right here at 12:30 and then exit at 14:30. 2 hour run. I'll run right there. So I quite run right there. Beautiful. Yeah, today we have a lot of perspective. Has so many things going on from our end. That's why we lose focus and we didn't see that forming. So it's a 4 breakout. In this case, it's auto block. Fair gap, retest, short, setup, and the time is 12:30 or 12:40. And huge risk reward ratio. That's the huge right there. Just one trade. You don't need much at all. To be patient and wait for one trade. This morning we jumped the gun too early and we got tired. and when the time comes, we don't have enough, we don't have enough psychological strength or patience to stay, check the trade, pull the trigger, even not pull the trigger or stay in the trade longer enough. So that's the winner run right there. That's the huge lesson. But anyway, that's the reason why we practice every day. Every day we need to practice to get things right. Just stick into the process right now. Forget about making money. That's we become. It's a byproduct. Just focus on process. Execute our setup and let's go of the control. We have no control. The market control. So if the market don't give us what we want, we should not be frustrated because we have no control. So we have to detach ourselves from the outcome and give up the control and pay attention to the time. Be patient. If there's no setup, then sit on our hand. We don't have to take a low quality setup at all. Anything else we want to say in this? I think just one trade should be enough for today right there. Okay, let's see how the last so we have Monday accumulation, manipulation, and then it distribution, and then accumulation, and then it's expansion again, and then it's accumulation. So very interesting to see how Friday come out. So we have 4 quarters, 1, 2, 3, 4 right there. Let's see how Friday come, play out to us. We want to see this level. If we look on the weekly candle, right here is the weekly candle. Let's delete this for now. So basically we want to see if it's retest this guy. This guy having retest, yes. As soon as it broke that level, it had been retested. Let's see if that level been retested or not. So far, yeah, it broke the level yesterday and it haven't retested them. So definitely it gonna retest the level one way or another. Maybe this Friday or maybe next week. It need to retest the level. The level at 1822, and let's see if it's gonna fill this gap. It's gonna retest, fill the gap also. All right, I think we are recapture what we need to recap for today, and we run a little bit over time. All right, that's it for today, and thank you for your time and interest. We're only grateful for this opportunity. We do what we love, then success coming our way for sure. No doubt about that. Bye for now and have a great evening.